Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey everybody.
Hey Lauren, I was looking at today's USA Today business section, and there was a disturbing headline that bothered me a little bit, and it's called "The SEC Lifts a Ban on Hedge Fund Ads. The change ends 80 years of restrictions for hedge funds being able to advertise to the general public." Right. So before we get into the nitty-gritty of this, what is a hedge fund compared to like a traditional mutual fund?
Yeah, so the idea behind hedge funds is that they are supposed to be only for very sophisticated investors. Yeah. Okay, so what that means is that, for instance, your mutual fund is valued every day. It's very transparent. You can always find out what's in it, and it has fraud insurance up to, I think the number is 25 million. I don't really know what the number is. Yeah. But basically, you can't get Bernie Madoff if you're in a mutual fund.
Right.
It's just impossible. Now, your mutual fund can lose a lot of money. That happens all the time.
Right.
A hedge fund, on the other hand, is often not valued every day. In fact, it maybe is only valued every quarter in really extreme circumstances. They can do pretty much whatever random thing they want. And they're not transparent. You can't just sort of look into them at all times and see what's inside them. Yeah, and so that's the whole thing about being a sophisticated investor, is that supposedly the only people who are going to be investing in these things are people who know so much about investing that it's okay that they don't have any of these basic sort of protections.
And the fee structure is a lot different too. I mean, hedge funds typically charge like 20% of the profits to the hedge fund manager.
Right.
And then
in addition to the regular 2% fee.
Exactly.
Right.
So the SEC, well, first of all, I this is my own editorial, but I don't believe the general public was clamoring for the ability to see hedge fund. So I suspect that some industry was lobbying heavily, which would be the hedge fund industry, because that's a way for them to raise new money, new assets.
Yeah.
The SEC's comment is that the reason we think this is a good idea is because we have put in some other rules. Even though we're going to allow the advertising, we're going to put in some additional rules and regulations that we will be able to obtain more information from hedge funds. So they're saying that's the reason I think it's a good idea. There was some dissenting opinions in this vote, so that was good. But right now it's a go, but it is open for public opinion.
Right.
So this is the thing I want to bring up. The dissenting opinion from the SEC said that they think this is a bad idea because investors will now get more information through social media, and the ability of bad actors to pursue unaccredited, unsophisticated investors will grow. It would make sense.
Well, I mean, once again, the whole structure of a hedge fund, which, I mean, at first might seem absurd that you would be investing in this thing where you don't know what's in it, and it's not valued very often. The whole excuse is only sophisticated investors are going to be investing in these. Well, then why do you need to advertise them?
Right.
I mean, if this is, all just these very sophisticated, high-rolling investors who know exactly what's going on, then it wouldn't seem that they would need this kind of advertising.
Right. And so then to end this episode, this is a proponent of the legislation. He's a founder of the FF Venture Capital Hedge Fund, which aids the young businesses. But he said that this SEC action is great because it's going to bring the high returns of early stage investing into the limelight and facilitate more money to early stage firms and thus to startups from more investors. So what he's basically saying is there'll be more general investors being able to find access to these funds, I guess.
Yeah, but in the real world, hedge funds' risk-adjusted returns are not any better than Treasury bills.
Right.
They're terrible.
They're terrible. And then the other thing is that there is another way to get access to these small companies.
Oh, right.
What is that? Which is?
Buy mutual funds that invest in small companies.
Right. And it's very transparent. So that's our ending. If you really are bothered by this, you can make a general comment to the SEC that this is a bad idea. It's just another way to confuse investors and give them another way to speculate and gamble with their money. So thank you for watching this episode of Erickson TV. We'll see you next time. Bye now.
See you next time.